in the coming months. This comes after the country recorded a negative trade balance in June this year. According to the Bank of Ghana's latest statistical bulletin, the nation recorded a trade deficit of a little over $73 million. My colleague Charles Nixon joins me in the studio to throw more light on the latest figures. Now, Charles, what accounted for this trade deficit in the first half of the year? I guess COVID?
Absolutely. If you look at the figures critically, it looks like in the month of June, imports started picking up. So there is a level of economic activities, and we are expected to see more imports going forward into the year. And exports has declined to some extent. It was very robust somehow in the first quarter because we recorded some level of trade surplus in January, February, March, April and May, but we experienced some more or less like a dip and growth between April and May. Unfortunately, we recorded a deficit in June. What this means is that we are experiencing more imports and exports is reducing. The challenge is that crude oil production, the demand for crude oil has not been quite good this year. We all know prices on the market is hovering somewhere around $38, $40 there were about. So the challenge is that we need to look at getting some exports in order for us to experience some trade surplus going forward. And the challenge is that if we continue to record decline, it means that there will be some level of pressure on our cedi or currency, in the sense that we are also experiencing a negative current account. And current account is your trade plus foreign inflows as well as investment. And if you're experiencing low inflows and investment, we all know the issue about COVID. Remittances has gone down. So that is a challenge going forward. But we are hoping that the authorities will find a way to diversify our export base so that we'll be able to continue with a trade surplus that we began somewhere in 2018. 2018 was a surplus, 2019 was a surplus. We cannot return to a deficit. There will be pressure on the currency. And when there is a pressure on the currency, interest rates will start shooting up. Inflation will also be affected.
What does the outlook for the rest of the year look like?
Well, I mean, now there's a bit of ease in terms of the COVID in this country. So there's a level of imports coming in. And if you look at the numbers, we experienced $1.12 billion in terms of exports in June. But import was quite high, $1.2 billion.
So we need to do a bit more to get the exporter.
Exactly. If the trend continues in July, August, September, till the rest of the year, then we might be in trouble. Even though we experience some surplus from the beginning of the year to somehow May. So that's the challenge.
Wiped out.
Exactly.
All right. Thank you very much, Charles Nixon. You're still watching Business Live. And tonight we begin a series of special reports throwing the spotlight on the Volta region's tourism potential. Fred Duho assesses the impact of COVID-19 pandemic on the sector.